If you've been struggling to find high probability trading zones or zones where you're likely to buy the market or sell the market with confidence, do well to watch this video to the end. Don't skip this video. Make sure you're subscribed. Make sure you've already watched how to mark key levels, market structure, how to mark key levels also on gold, because this video will give you clarity on all of them. Okay, I remain Oko Anthony Uche, also known as Tony Sniper. Let's dive into the board. Now, when it comes to finding high probability trading zone using supply and demand, or using our basic support and resistance, or using market structure and key zones, this is how you spot them. You can currently see how gold is dumping at the moment aggressively. I already sent it to my Telegram channel. If you're not part of my Telegram channel, you're still sleeping. I've told you guys before and I'll tell you guys again. You've already found Tony Sniper. Your life is about to change. If you miss it, then you're on your own. Also, for those of you that have been asking me about the mentorship, when are we having the mentorship? When are we not having the mentorship? By August 1st, I will let you guys know if we're going to be having one more online mentorship this year or not. Then for those of you that want to enroll for our physical academy, please do well to come meet us at GBP Abuja. Peace. Now, let me teach you guys how to find high probability zones where you can actually buy or sell the market using market structure and key level. Now, most importantly, you want to go to the 4-hour time frame. Now, why do traders trade on the 4-hour time frame? Because the 4-hour time frame is the most accurate and predictable time frame. Now, if you spot a buy on a 4-hour time frame, it is stronger than if you spot a buy on 15 minutes. If you spot a sell on the 4-hour time frame, it is stronger than if you spot a sell on the 15 minutes. The only time frame that can rival the 4 hours time frame is your daily time frame. But of course, we all know the daily time frame is only for position or swing traders. But the 4-hour time frame, you can also day trade and you can also swing trade. So in a situation like this, right? In a situation like this, where we notice the market is actually like this, how do we look for high probability zones to buy or sell the market? Number one, you want to what? You want to analyze your market structure. First, find out where the trend is. This is a bullish trend, right? Meaning every reversal that comes to the market is an opportunity for what? More buy. Example like this. So you always want to buy the market where? Here. Do you understand? This is it. You always want to buy the market at a retracement. That is how you find high probability zones. Okay? Now let's take this out. Good. Now let's continue. Now at this point, we can actually spot that there was an exhaustion here, right? From our market structure video. Now this is your first level where you want to look to what? You want to look to buy the market if the market comes to that level. This is your first level, right? The last here. This is your first level where you want to what? You want to look to either buy that market or what? Or look forward to what would happen, either maybe from the price action or from the market structure movement. Remember, most importantly, we have two types of exhaustion. We have an exhaustion that leads to a reversal. We have an exhaustion that leads to what? A continuation. Now, this kind of exhaustion leads to what? A continuation, while this kind of exhaustion at the top leads to what? A reversal. Now, when the market comes back here, you want to look for buy. You've already highlighted it on your 4-hour time frame. Remember, this video, you're actually using this video to find high probability key zones where you're supposed to buy or sell, not how to mark key levels or how to mark your supply and demand. I've already taught you guys all that. Now you're just looking for those zones. After you're done marking your key levels, I don't need to start marking them again. I just want to teach you how to find those zones. Now you've already highlighted it on your 4-hour time frame, right? This is it on your 4 hours. Then you move to your 1 hour. Immediately you move to your 1 hour, you come back here. You want to make sure that zone that you highlighted was actually the zone where the impulse move started from. That is actually a very high probability zone because there are chances that we have so many buyers resting here. We have so many buyers waiting here. Meaning if the market should dip into here, buyers will buy it back up. So this is actually what? A high probability zone for a buy. Always make sure the zone that you're looking for are zones where what? The market is likely to react immediately it gets to that level. Example for a sell, you can see this candle here. I talked about it on how to mark key levels on gold. Whenever you see a weak formation on gold, either to the upside or to the downside, it means there was a strong pressure. Now, this pressure pushed the market down. Now, after pushing the market down, what happened? The market came back to that level, then the sell started. So this level here would have been your high probability zone for what? For a sell. Do you understand? And what happened after the market dipped? The market came back here, then sold. Now, this is your high probability zone for a buy. If the market come back here, are we going to be looking for buy? We'll find out when the market gets to that level. Do you understand? Now, we'll come back to this. Now, let's move to GA. Now, when it comes to GBP AUD, of course, in order for you to be able to mark your market structure accurately or your key levels accurately, you need to understand supply and demand. All my students, both online and physical students, already know how to draw supply and demand. Don't worry, if you ever get mentored by me, you'll find out that supply and demand is the easiest concept to learn, and it will help you and bring clarity to how you trade. Okay? Now, let's come to GBP AUD. Let's go to the 4-hour time frame. Now, this is our 4-hour time frame on GBP AUD, right? This is our 4-hour time frame. Let's move to the daily. Remember, we're looking for high probability zones, right? To either look for a buy or look for a sell. Now, this is our daily. Now, on the daily time frame, we can clearly see that what? This market actually had a support zone around this point here. So what does that mean? This is where what? This is where the buy originated from. This second part is where the buy what? Originated from. We'll mark it as yellow. On your daily, don't forget. Now, let's move to the 4-hour. Now, this is our 4-hour, right? This is our 4-hour time frame. You can actually see the 4-hour time frame here. Now, what are you looking for on this 4-hour time frame? You're looking for a buy. But how would you know if this buy is valid or not? You want to wait for the market to what? You want to wait for the market to clear this liquidity zone here. Remember, like I said, when it comes to liquidity zones, the market would always, like I talked about double bottom, the market will always go back to clear that liquidity before buying. If you talk about double top, the market will always go back up, clear that liquidity before what? Selling. Now, when we make a video on how to spot liquidity, all this will now be very clear. But for now, just learn all these concepts, because if you learn all this, you're already 10 steps ahead of uninformed traders. Okay, please take notes. Now, what are we doing here? We want to wait for what? Let me bring this back so we can actually continue. Good. We want to wait for what? We want to wait for this market to actually what? We want to wait for this market to actually break below here. Now, if this market breaks below this level here and comes to this point, have this market cleared all the liquidity here from early buyers or not? The market have actually cleared them. Then when the market comes into this zone here, that is when we buy. This is a high probability zone for a buy. Where did we spot that zone from? From our daily time frame. Don't forget. That zone was spotted where? From our daily time frame. You can see it here. You can see it. That zone was spotted from our what? From our daily time frame, because that was where the original trend started from. Then the market was consolidating around it. Now, let me give you a simple illustration. This is what happened here. All these things you're seeing here, this is it here. Then you buy. So this is what we are waiting for. We're waiting for this market to break below this exhaustion, which was created here. Once the market dip below here, clear all this liquidity, then we buy to the upside. This is how you spot a perfect high probability zone for a buy, or a perfect high probability zone for what? For a sell. Now, let's see what's going on here on gold. Now, you can clearly see that gold has actually just tapped into our high probability zone for a buy. Now, when the market taps into your high probability zone for a buy, what do? Do you run and start buying? No. That is when you pay attention, because that level will tell you what will happen. You want to wait for the candle closure. Okay, very important. You want to wait for the candle closure. Meaning, if a 1-hour candle just created here, you want to wait for that 1-hour candle to close. Immediately that candle closes. If the candle closes above that high probability zone, then you look for buy. But if the candle closes below that high probability zone, then you look for what? You look for sell. Except you're scalping. If you're a scalper, then immediately the market is approaching your high probability zone. Automatically you've already what? Automatically you've already placed your buy limit. So once the market just dip into and activate, it will shoot back up. Can you see how gold is reacting? Can you see how gold is reacting on the high probability zone? Now you cannot just run and start buying. The only thing you want to do for here, you want to wait for this candle. You want to wait for the next candle. Now, if the next candle closes below like this, then you continue to look for sell. But if the candle closes above here, what do you look for? More buys to the upside. So finding probability zones are very easy. You just need to go to your chart, spot where the trend of that market started from, or where the market is likely to have liquidity, either a buy side liquidity or a sell side liquidity, which can be found at the top or at the bottom. Then you just wait for the market to clear those liquidity, then you go in for a buy or for a sell. I remain Oko Anthony Uche, also known as Tony Sniper. Watch this video, practice it, and become a sniper. Peace.